so far. But let's stick with corporate conversations and earnings. SBI Card has been under pressure on the back of second quarter numbers that came through. The company posted an all-time low net interest margin of just 11.3%. Credit cost continues to remain elevated as well. Over the last few quarters, the revolver rate has declined from 45% to 24%. It's a sharp drop. To talk about more of these nuances, talk about the earnings, my colleague Abhishek caught up with Abhijit Chakravarti, the MD and CEO of SBI Card, and started off by asking him about the company's NIM, net interest margin picture, which has been under pressure.
So net interest margin is marginally down from the previous quarter. It will always be a function of the mix of the term and the near-term consumers. So long as we maintain an overall trajectory of interest-bearing NEA in our portfolio, we expect our NIM to be maintained around these levels, and it will slowly improve.
Well, revolver rate has been flat for last 5 quarters, coming in at 24%. Now, I remember it was at 45% way back in Q1 FY21. Give your outlook on the same, that where do you expect revolver rate going ahead?
So, revolver rate will always depend upon the consumer behavior. So, our objective is to primarily focus on our interest-bearing assets. If there is a flattish trend on the revolver, somewhere we have made it up through our EMI-based exposures. If you look at it, we are still steady on 62%. Rather, our EMI-based component has gone year on year from 59 to over 59 to 62%. So somewhere our focus is on the interest-bearing assets combination. That should help us out.
Well, credit costs have been elevated now for 19 quarters in a row. It has been above 4.7%. So could you give a guidance with respect to when do you see this credit cost tapering down? I know the 2021 book has impacted. However, the unsecured portfolio is also showing signs of stress. So could you give an outlook on credit costs, sir?
Our near-term credit costs will remain elevated around the current levels. But we have created various portfolio and our account level monitoring mechanisms through early warning signals, and with all that measures, all those measures, portfolio levels, account level measures, all of them have helped us in restricting the credit costs to the current levels. Rather, we have improved from the previous quarter, and somewhere the unsecured loan scenario prevailing in the market, in the ecosystem, we are not untouched. But having taken the right steps at the right time and initiated at the account level activities, which include limit restrictions and cross-selling embargoes, all that is going to help us in coming days.
Well, you spoke that, unsecured portfolio is a cause of concern. It might be for the sector as well. What kind of stress are you seeing over there? As you mentioned, credit costs may remain elevated at current levels.
Yes. So as we don't see any specific cohorts or geography or any particular segment being impacted. It's just that some customers are not able to repay. They are under stress. When we look at it from the bureau information perspective also, so all taken together, we find that there is nothing specific to our portfolio as such. It's that some accounts, some individuals will not be able to sustain it, and those are the indications for the short term.
Well, how do you see the spends in festive season? For the month of September, the RBI data showed sharp decline in spends this time around. So for October, the festive season of Diwali, how is the trajectory that has been coming up, with respect to spends behavior from the customers?
So for SBI card, we reached our highest spends ever in to the levels of 79,000 crores. And we need to reckon that year on year. Last year, the festive season was spread over 2 quarters, Q2 and Q3, whereas the current festive season has started in Q3. So somewhere the consumer behavior, consumption patterns, overall spends, we find that it will be on a growing trajectory.
Talking about growth, what is the outlook on growth going ahead? We saw a sharp decline in your market share this time around. So could you give a guidance with respect to market share or in spends and in overall cards as well?
So we always work on our overall corporate strategy of business goals. We will continue to work on that. Our strategy first is to have a sustainable growth along with profits. We will continue to work on that. Any other market indicator, in our opinion, is a derivative.
All right, that is the management of SBI Card talking to us about their earnings and the way forward. The stock is just slightly off the low, still seeing a cut of over 5% on SBI Card. But for that, we don't need to take a short break now. On the other side, Max Estates has listed on the exchanges. So, and this is at a higher price versus the discovered price.